Linda Raschke turned $25,000 into $1.2 million in 18 months. And here's what most people miss. She was wrong 40% of the time. The secret wasn't in being right. It was in something far more powerful, something most traders never discover until it's too late. Picture this. October 19, 1987, Black Monday. The day the market didn't just fall, it had a complete breakdown. The S&P collapsed 22% in a single session. Traders with decades of experience watched their careers evaporate in hours. Orders wouldn't fill. Liquidity vanished. Prices gapped in ways that made no sense. Panic wasn't just in the air, it was the air. And in the middle of this chaos, while veterans froze and novices ran for the exits, Linda Raschke was making money. Not lucky money. Not accidental money. Precise, calculated, surgical money. She didn't try to catch falling knives or call the bottom like a hero. She didn't predict the future. She simply played a game most traders didn't even know existed. You're watching this because something isn't working. Maybe you've got the indicators, the patterns, the strategies everyone swears by, but when you sit down at your screen, it all falls apart. You freeze when you should act. You act when you should wait. You watch perfect setups sail by while you're stuck in losing trades, telling yourself stories about why this time will be different. You're tired of feeling like the market is playing you instead of the other way around. You want to know what she knows. You want to move the way she moves. You want that kind of precision, that kind of calm in the storm. Here's what you need to understand right now. Trading isn't about finding the perfect system. It's not about more indicators, better software, or secret patterns the institutions don't want you to know about. Linda Raschke's edge, the thing that turned her into a millionaire while others with the same tools went broke, isn't something you download or buy. It's built. It's trained. It's earned through thousands of hours of looking at yourself as honestly as you look at a chart. And over the next 30 minutes, you're going to see exactly how she built it, move by move, decision by decision, until discipline became instinct and chaos became opportunity. Most traders approach the market like it owes them something. They expect clarity. They expect fairness. They expect a second chance when they mess up. Linda learned early that the market doesn't care about your expectations. It doesn't care about your bills, your dreams, your need to be right. It's going to move however it wants to move, and your job isn't to control it. Your job is to learn how to move inside of it without getting destroyed. Think about the last time you took a trade. Be honest. Did you have a plan before you clicked that button, or were you reacting to the candle in front of you? Did you know exactly where you'd get out if you were wrong? Or were you secretly hoping you wouldn't have to make that decision? Most traders are flying blind and calling it intuition. They're gambling and calling it analysis. They're bleeding slowly and calling it learning. Linda doesn't do any of that. She sits down at her desk every single day like a surgeon walking into an operating room. Everything is prepared. Every tool is in place. Every move is rehearsed. And when the market opens, she's not hoping, she's executing. Her day starts hours before the bell. While other traders are scrolling social media or scanning for hot tips, she's studying the overnight markets like a detective examining evidence. Where did price find support? Where did it get rejected? What's the mood in Asia, in Europe, in the futures? She's not trying to predict what will happen. She's mapping the battlefield so when the war starts, she already knows the terrain. She marks her levels, support, resistance, prior day highs and lows, and these aren't random lines. These are the places where other traders will make decisions, where institutions will defend positions, where the crowd will panic or get greedy. She's thinking 3 steps ahead before most people have even opened their charts. And then she does something most traders never do. She rehearses. She runs through scenarios in her mind. If price gaps up and holds, what's my move? If it fakes out and reverses, how do I respond? If we chop sideways, do I stay out or look for a different setup? By the time the market opens, she's already traded it mentally dozens of times. There's no hesitation, no debate, no emotional reaction, just execution. It's like a chess player who's studied the opening moves so deeply that the first 10 decisions are automatic. She's not improvising. She's deploying a strategy that's been tested and refined over decades. But here's where it gets interesting. Speed. Short-term trading lives and dies on speed, and most people misunderstand what that means. They think it's about being fast, clicking buttons quickly, reacting to every tick, jumping in and out like a caffeinated day trader. That's not speed. That's panic dressed up as action. Real speed is about knowing exactly what to do the instant the setup appears, and that only comes from preparation. Linda's edge in the fast game isn't that she's quicker than you, it's that she's already made the decision before the opportunity even shows up. Remember Black Monday? While traders were paralyzed, trying to figure out what was happening, she was already moving. She didn't need time to think because she'd seen chaos before. She knew that when panic dominates, the crowd loses discipline, and that's when the opportunities appear. She didn't try to be a hero. She didn't swing for home runs. She took small, precise cuts, singles, not grand slams, and by the end of the day, those singles added up to more than most people make in a year. That's the paradox of the fast game. The fastest traders aren't the ones moving constantly. They're the ones who can sit completely still until the exact right moment and then strike without hesitation. But speed without structure is just chaos. You need to know what you're looking for, and that's where pattern recognition comes in. Linda doesn't see random candles when she looks at a chart. She sees behavior. Every flag, every wedge, every compression is just the visible echo of what thousands of traders are doing: fear pushing price down, greed pushing it up, indecision keeping it trapped. She's not memorizing shapes like a student cramming for a test. She's understanding the psychology behind those shapes, so when they appear, she knows what's likely to happen next. There's a story from 1994 that captures this perfectly. She was trading cotton futures, and the market had been dead for days, just grinding sideways, no direction, no energy. Most traders were bored out of their minds, either forcing trades that weren't there or walking away entirely. But Linda was watching something else. She noticed the daily range compressing, from $2.50 down to 80 cents over 7 sessions. Volume was dropping every day. The market wasn't dead, it was holding its breath, and she knew from experience that when a market compresses like that, it's not staying quiet for long. It's building tension, coiling up like a spring. Days later, it snapped. Volume surged, price broke out, and what looked like random noise suddenly made perfect sense. It was the calm before the explosion. And Linda was already positioned. She didn't need to chase the breakout because she'd recognized the pattern in advance. She'd put her piece on the right square and simply waited for the market to make the move she expected. That's the power of pattern recognition, not predicting the future, but seeing the setup before it's obvious to everyone else. But here's the trap most traders fall into. They treat patterns like magic spells. They see a head and shoulders and assume it has to work. They see a breakout and jump in without thinking about context. Linda doesn't do that. She anchors every pattern in the bigger picture. What's the trend? What's volatility like? Are institutions active, or is this just retail noise? The same pattern in two different environments can have completely opposite outcomes. And if you don't see that, you're going to get destroyed. And then there's the indicator problem. If you look at most traders' charts, you can barely see the price because there are so many indicators layered on top of each other. Moving averages, oscillators, volume bars, momentum indicators. It's like they're trying to make the market easier by adding more tools, but all they're doing is creating noise. Linda's charts are clean. A few moving averages to define the bias. Maybe an oscillator to catch overextension. That's it. Each tool has a job, and she doesn't ask it to do more than it was designed for. She learned early that when you rely on indicators to make decisions for you, you stop developing the instincts you need to survive. The indicator becomes a crutch, and when it fails, and they all fail sometimes, you're lost. She flips that dynamic. She makes the decision first, based on price action and context, and then uses indicators to confirm or refine her entry. The indicator is the supporting actor, never the star. She has a saying that hits hard: if you need 5 indicators to take a trade, you don't have a trade, you have doubt dressed up as analysis. The best setups are obvious with minimal tools. The more confirmation you need, the less conviction you actually have. But even the best setup in the world means nothing if you can't protect your capital. In chess, you can lose almost every piece on the board and still find a way to win. But lose your king, and the game is over instantly. In trading, your capital is your king. Without it, you're done. No second chances, no do-overs. Linda treats risk management like the shield that keeps her alive, and she never lowers it, not even for a second. She doesn't romanticize risk. It's not an abstract concept buried in a spreadsheet. It's real. It's the difference between trading tomorrow or being forced out of the game permanently. This perspective comes from scars, trades that crushed her, days where the market didn't just reject her position but annihilated it. Those moments didn't teach her to fear the market. They taught her to respect it. And respect means rules. Hard rules. Non-negotiable rules. Her first rule is simple: never let one trade knock you out. That means every position has a predefined stop before she even enters, and she never adjusts it to give the trade more room once it's live. If the stop gets hit, she's out immediately. No negotiation. No hope. No waiting for it to come back. The decision was made when her mind was clear, before fear or greed could cloud her judgment. Position sizing is the second layer of protection. She doesn't size up because she feels confident. She sizes up when volatility, probability, and her playbook all align. If the market is wild, huge swings, low liquidity, unpredictable moves, she goes small. If conditions are clean and the setup is textbook, she'll press a bit harder, but never recklessly. It's controlled aggression, not blind attack. There's a story that shows this perfectly. In the late 90s, she watched a fellow trader turn 50,000 into 400,000 in 3 months. Incredible, right? Everyone was talking about him like he was a genius. 2 weeks later, he was down to 30,000. One oversized position. One stop he moved because he knew it would come back. One moment of greed. Game over. Meanwhile, Linda's account during that same period, steady growth. No dramatic swings. And most importantly, she was still trading when he wasn't. That's the difference between surviving and thriving. The market doesn't reward the flashiest trader. It rewards the one who's still standing, and staying in the game requires energy. Mental energy. Trading is exhausting in ways most people don't understand. It's not physical, you're sitting at a desk, but the psychological load is crushing. Every decision carries weight. Every tick is a potential threat or opportunity. Your brain is processing information constantly, filtering noise, managing emotions, executing plans. If you're not managing that energy deliberately, you'll burn out, and when you burn out, you make mistakes. Expensive mistakes. Linda treats her mental state like an athlete treats their body. She schedules breaks. She stays hydrated. She limits distractions. She understands that her brain is the real trading platform, and if it's sluggish or overloaded, her edge disappears. At the end of each day, she reviews every trade, not just the technical details, but her emotional state. Was she following her plan or reacting? Was she patient or impulsive? Were her best trades the ones that fit her playbook, or were they accidents? This review isn't optional. It's how she stays sharp, how she catches bad habits before they become patterns, how she turns experience into wisdom. But no matter how disciplined you are, the market will eventually change on you. What worked last month stops working. The setups you trust start failing. Volatility shifts. Suddenly you're not making money anymore, and if you're stubborn, if you keep doing the same thing because it should work, you're going to get destroyed. Linda's longevity comes from her willingness to adapt without abandoning her core principles. During the 2008 financial crisis, volatility went insane. Moves that should have taken weeks happened in hours. Trends broke without warning. The market felt manic, almost unhinged. A lot of traders clung to their old strategies, hoping things would go back to normal. They didn't. Linda didn't wait for normal. She shifted from trend following to mean reversion, recognizing that the market's exaggerated moves were creating opportunities in the opposite direction. She changed her formation when the storm changed direction. This isn't improvisation. It's calculated flexibility. She still works from a playbook, but it's modular. Each module is a strategy designed for a different market condition. Low volatility and trending, she knows which setups to deploy. High volatility chop, different playbook. When the environment changes, she swaps modules without hesitation. The biggest enemy to this kind of adaptability is ego. Traders want to believe they've figured it out, that their system works in all conditions. Linda treats that belief like a ticking bomb. The moment you think you've mastered the market is the moment it humbles you. She tells her students something that changes everything. The market doesn't care about your favorite setup. It's harsh, but it's liberating. Once you accept that your preferences are irrelevant, you're free to adapt to what's actually happening, instead of what you wish was happening. And that freedom is what keeps you alive when the storm shifts, but even perfect adaptation doesn't matter if you can't control yourself. The real battlefield isn't on the screen. It's in your head. Linda keeps a journal, and it's not just entry prices and exits. It's a mirror that reflects why she took each trade and what she felt in the process. Because the greatest blind spot a trader has isn't the market's next move, it's their own behavior. Every trade gets recorded with ruthless honesty. Did she follow the plan? Did she hesitate? Did she chase? What was her emotional state before, during, and after? She treats these notes like a chess player reviewing past games, looking not just for tactical errors, but for moments where emotion hijacked logic. Over time, patterns emerge, not in the market, but in herself. Maybe she overtrades after a win streak. Maybe she cuts profits too quickly after a loss. By seeing these tendencies written down, she can anticipate them before they take control. She discovered something fascinating. Her worst trades often came on Mondays after profitable Fridays. The weekend gave her time to replay the wins, and it inflated her confidence just enough to make her sloppy. Once she saw this pattern in black and white, she adjusted. Stricter rules on Mondays. Smaller positions until she proved she was thinking clearly. That's the power of self-awareness. You can't fix what you can't see, and the journal makes the invisible visible. But awareness alone isn't enough. You need a system for reinforcing the right habits until they become automatic. Linda built what she calls a discipline loop: prepare, execute, review. Prepare is the groundwork. Mapping levels, defining setups, running through scenarios before the market opens. Execute is the live game. Taking only trades that fit the plan, managing them according to pre-set rules, never bending stops or targets once the trade is live. Review is the self-audit. Every trade evaluated, every deviation noted, every emotional trigger identified. This loop runs daily, without exception. Over time, it forges muscle memory. She doesn't think twice about cutting a losing trade anymore. Her hand just does it. She doesn't chase breakouts without confirmation, because the loop has trained that impulse out of her. There's a story about one of her students who couldn't stop moving his stops. Every time a trade went against him, he'd adjust it, give it more room, and turn a small loss into a disaster. Linda had him practice with a demo account under one rule: stops were locked. No adjustments, no matter what. For 3 months, he couldn't touch them. At first, it was torture. By month 2, it was uncomfortable. By month 3, it was automatic. When he went back to live trading, the habit was so ingrained that moving stops felt wrong. That's how discipline becomes instinct. And once you have that foundation, you can start deploying capital with precision. In chess, you don't send all your pieces forward on the first move. You advance the right pieces at the right time. Linda treats position sizing the same way. Not every trade deserves the same commitment. Deploy too much on a weak setup, and you risk crippling yourself. Deploy too little on a high probability opportunity, and you waste the advantage. Her sizing decisions happen before the trade exists. Volatility, context, setup quality, all of it determines how much she's willing to risk. If the market is messy, she scales down to minimal exposure. If conditions are pristine and the pattern aligns, she increases size, but never beyond the point where a single loss causes real damage. This isn't just math, it's psychology. Larger positions amplify every emotional response. The same chart that looks clear with one contract feels like a minefield with 10. Linda knows her emotional thresholds, and she sizes to stay within them. Her method is dynamic. Position size changes with the market's rhythm. In trending conditions, she might press harder, adding to winners with trailing stops. In choppy markets, she goes small, focusing on survival rather than growth. This flexibility ensures she's never overextended when the storm shifts. She learned this the hard way in the early 90s. After a string of wins, she got aggressive, tripling her normal size on what looked like a sure thing. The trade reversed violently. What should have been a 2% loss became 7%. The financial hit hurt, but the psychological damage was worse. It took weeks to regain confidence. Now she has a ruled position size is determined by math, not emotion. And inevitably, there will be losses. Even the sharpest trader faces strings of red days. What separates survivors from casualties is how they respond. Linda has a recovery method that keeps her from spiraling, a process forged through brutal markets and her own human reactions to them. She remembers a 3-week period early in her career where nothing worked. Setups that had been reliable for months suddenly failed. Breakouts reversed instantly. Mean reversion trades refused to bounce. By the end of week 2, she wasn't just losing money, she was losing clarity. The voice in her head got louder, whispering that one big win could erase the pain. That whisper is the most dangerous voice in trading. Instead of pressing harder, she pulled back, reduced position size to a fraction of normal, became hyper-selective, taking only the cleanest setups, often skipping days entirely if the market looked messy. This wasn't retreat. It was strategic defense. When you're down material in chess, you don't make wild, desperate attacks. You consolidate, protect your remaining pieces, and wait for the right moment to counterattack. She also doubles down on review during drawdowns. Every trade gets dissected not just for technical merit but for emotional triggers. Was she forcing trades out of boredom, ignoring context because she wanted to recover quickly? The answers, written in her journal, often reveal self-sabotage invisible in the heat of battle. She has a saying, "The market will still be there tomorrow, but only if you are too." It's a reminder that preservation during bad stretches matters more than heroic comebacks. The traders who blow up trying to recover in a day are forgotten. The ones who scale back, regroup, and return with clarity, they're still playing years later. Recovery isn't just about getting back to break-even. It's about rebuilding confidence without inflating ego. Linda's goal after a losing streak isn't to win big. It's to re-establish rhythm and trust in her process. She knows the market will eventually present opportunities where she can press harder again, but only if she's still alive to take them. And once the bleeding stops and composure returns, she leverages her greatest strength, specialization. In a world where traders chase every shiny setup, every new indicator, every strategy they see online, Linda is a specialist. She doesn't try to master everything. She masters what matters to her, then works those setups until they're as natural as breathing. Her trading arsenal isn't a vast library of complex systems. It's a small collection of signature setups she's refined over decades. She knows them inside out, not just their appearance, but their behavior. How they perform in trends, in chop, in high and low volatility. Their failure modes, their nuances, their ideal timeframes. This intimacy gives her a speed and confidence most traders never reach. In chess, grandmasters don't memorize every possible opening. They specialize in a few, learning them so deeply they can anticipate counter moves 5 steps ahead. Linda does the same. By narrowing focus, she avoids the constant second guessing that plagues traders jumping between strategies. There's no debate in her mind about whether a setup is valid. She's seen it thousands of times and knows exactly what to do. The temptation to diversify is strong, especially after losses. Many traders think adding more strategies will balance results. Linda sees that as dilution. Every new method is one more thing to monitor, one more source of confusion, one more way to erode execution quality. She'd rather trade one A+ setup perfectly than juggle 5 mediocre ones. She tells a story about a trader who knew 20 different patterns, but couldn't execute any cleanly. When a setup appeared, he'd hesitate, wondering if this one really counted, if another pattern was better, if he should wait. By the time he decided, the opportunity was gone. Meanwhile, Linda would see her specialized setups and strike without hesitation. Guess who was profitable? Specialization eliminates hesitation. When you know your playbook inside out, you either take the trade or you don't, no gray area, no doubt. And it frees mental bandwidth. When execution is second nature, you can devote energy to the highest level of the game, seeing moves before they happen. Before the market opens, Linda often closes her eyes and runs through trades that haven't happened yet. Not vaguely, but vividly, like a pilot running pre-flight checks or a chess master visualizing the next 10 moves. This is mental rehearsal, the invisible training that allows her to act without hesitation when the unexpected happens. She pictures the board. Key levels marked, volatility defined, scenarios mapped. If the market gaps above resistance and holds, she visualizes the entry, the stop, the target. If it fakes out and collapses, she rehearses cutting immediately, flipping bias if needed. These aren't fantasies. They're simulations rooted in patterns she's seen hundreds of times. There's neuroscience behind this. Mental rehearsal activates the same neural pathways as physical practice. Athletes have known this for decades. Linda applies it to trading. By the time she clicks the mouse, her brain has already executed the trade successfully multiple times. And this practice, this daily mental preparation, is what's kept her in the game for decades. Because the endgame is where every decision echoes louder. There's less room for error, fewer pieces to hide behind. For Linda, the trading endgame isn't about a single trade or even a single year. It's the decades-long arc of staying in the game, evolving, refining her craft until precision feels effortless. Her legacy isn't a secret indicator or hidden formula. It's a mindset. The board will always change, patterns morph, volatility cycles shift, technology reshapes the landscape, but the principles endure. Discipline isn't negotiable. Risk management isn't optional. Adaptability isn't a nice to have. These are the non-negotiables she's carried from her earliest pit trading days to today's algorithm-driven markets. What makes her a technical tactician isn't just chart reading. It's the orchestration of every piece in her game. Her setups are clean, her tools are precise, her size is calculated, and her psychological game is relentless. She doesn't need to be right all the time. She needs to play the right moves at the right moments and protect her king long enough for the next opportunity to arise. Linda once said something that captures her entire philosophy: "I'm not trying to beat the market. I'm trying to outlast it." That shift in perspective changes everything. When you stop trying to conquer and start trying to survive and thrive, the game becomes sustainable. You stop taking unnecessary risks. You stop forcing trades. You stop treating every day like your last chance to make money. Traders who watch her work often think she's calm because she's certain. The truth: she's calm because she's prepared. She knows she can't control the storm, but she can control her moves on the board. That control is her freedom. It keeps her from chasing, from forcing, from spiraling after losses. Her edge isn't in outsmarting the market. It's in outlasting it. The storm will rage tomorrow, next month, next year. The board will still be there, waiting. But only for those who've learned to move with precision, protect their capital, and adapt when the wind changes. The 13 moves you've just learned aren't just Linda's. They can be yours. But knowing them and living them are two different games entirely. So here's the question that matters: are you playing the market, or are you just reacting to it? Are your moves deliberate, or are you letting the storm toss you from trade to trade? You already have a board in front of you. Your capital, your tools, your setups, your habits. The only question is whether you'll take control of it before the market makes the move for you. Tonight, before you do anything else, write down your last 3 losing trades. Not the prices or the charts, write what you felt. Were you angry? Desperate? Overconfident? Did you break your rules? Did you move your stop? Did you revenge trade? Be brutally honest. This is your mirror, and until you look into it, you're playing blind. Then tomorrow, Before the market opens, choose one thing from Linda's playbook to implement. Just one. Maybe it's setting your stops in stone. Maybe it's reducing position size. Maybe it's waiting for your A+ setup instead of taking B- trades. One thing. Master that, then add another. Because markets will always be chaos. The storm will never stop, but the board is yours. Every day, you choose how to play it. You choose whether to protect your king or gamble it away. You choose whether to adapt or stay rigid. You choose whether to learn from defeat or let it define you. As long as you can see the patterns, protect your capital, and keep making precise moves, you'll still be here tomorrow, ready for the next game. Trading isn't about winning every battle. It's about staying in the war. The board is set. The pieces are in position. Your move.